The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Sorry about that, folks. Welcome to the December 13th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 117 points at 19,915. S&P's up 16 at 2273. NASDAQ Composite up 65 points at 5478. Russell 2000 up 5 points at 1377. DAX closed up 95. The FTSE closed up 78. Gold is back $6. Silver down 19 cents. Light sweet crude up 38 pennies, leading the charge to the upside. Amazing Amazon. AMZN up $19.58, 2.5%. You've got 77 Energy. Maybe it's an IPO, I don't know. It's up 61%. Alphabet or Google up $12. Intuitive Surgical up 10. Priceline up 8. Tesla up 7. To the downside, Proteon Therapeutics down 73%. That does not sound good. Must be another, I don't know, maybe it's a phase 3 trial that blew up, whatever it is. It's blown up 73% to the downside. Chipotle off about 1.5% off $5. Innovalin Holdings down 35%. $5 is what it takes to get that down 35%. Alexian Pharmaceuticals off 5. Ultra Industrial Motion Corp up 10%. AIMC. Buffalo Wild Wings, it's got some hot salsa to the downside off $3.50, 2%. Okay, so where do we begin? I think where we begin is we'll look at GE. Well, let's begin by looking at GE. Duffy in the den would like us to look at GE. Let's just go right to it. Then we'll go to the Qs out there. So if we look at General Electric right now, trading out at $31.79, we can see that prices above all market profiles, all, by the way, meaning daily and weekly. Support then, therefore, $31. That's its daily market profile out here. Where GE is running into right now, we're going to see where it had this little downdraft out here. 32.07 looks to be the mark where GE is headed to. Let's go ahead and turn those profiles off if we can. And we can. The volume down there, that gap break to the downside was 57 million. You're coming into this year with light volume. Today, 16 million. Yesterday, 31 million. The day before, 31 million. Watch the number 3207. If price can close above that level, then the breakdown will get tested. Or, said another way, the cap will get tested. And that would be the low, at least, of July 21st, which would be 32.49. But you're heading up there with light volume. Expect this to be the pilot just put on the fasten seatbelt sign if you are riding in GE. Now, that's on a daily chart. I don't know, Duffy, what the time period is, if you're holding it, if it's long-term trade, short-term trade, all those things would have us take a look at maybe a different chart or different chart patterns and so on. Okay, so we got that. Now let's go take a look at I really think the story of the day is not the Dow, where everybody is focused. but really is inside the NASDAQ. Now, everybody believed that the NASDAQ was the weak link out here. I have not held that belief at all. You've in fact never heard me say that. If we take a look at the Qs out here, now I'll explain why and be able to show you what the NASDAQ in essence was doing out here. If we take a look at today, though, it's only at 111. We've been trading since 9:30, 30 million shares to the upside. Now, that's taking out swing points from October 25th that had 20 million and October 24th, 19 million. You go back to the highs in October, 19 million again, 9 million September 22nd, 22 million. So you have conviction behind this move out here. You know, small A to B equals C to the upside. If you just took a look at that, I'll go ahead and give that to you. It'd really come back here to the trading day of November 4th. You could either do November 4th or November 14th. I've already selected November 4th. That's what we're doing. You've taken out the swing point with volume. Uno to Uno says 121.28. Now, an inexperienced trader would say, hey, it's an A to B equals C. I'm going to go ahead and sell that. Not so fast. Because this wants to head up to 122.93, maybe even 125.03. You know, you've got conviction. You're blown away that swing point with volume. Supremo. I don't know what that means. Now, if we take a look at what has the NDX actually been doing, I take a look at it in two different ways. First, I'm going to take a look at the equity futures contract out here. Here is the NQ. Now, this is a monthly chart for the NQ. These lines going across my screen horizontally. The green ones are representing the weekly horizontal trading range boundary lines. These are price levels that help us to identify horizontal levels of support and resistance. So where the NQ has been trading into for the last 4 weeks has been into resistance, 48.81.47. That's why we've seen it get up here, stall, get up here, stall, get up here, stall, as if it was a pole vaulter out here. Pole vaulter, not Paul Volcker. Now, with regard to pullbacks that we've seen over the course of the last 4 weeks as well, we have seen price, in fact, this week here, if we take a look at the trading just over there since Sunday, we have seen that the price level of 4720.96, if we want to try to get exact out here, that's been the monthly horizontal trading range. That is the red line that is out here. Price is now above, found support at the monthly. Weekly's not over. It's only Tuesday, so we'll have to really see what Friday brings. But if price can, you want to write this down in the NQ, can stay above 48.81, its next level that it wants to go tag is going to be 52.58. I'm looking at longer term, so I can give you a little bit longer term guidance. We can look at all the short term stuff that you want, but I want to make sure that you have the longer term guidance out here. So today's action inside the Qs, taking out a swing point with volume, having an A to B equals C to the upside, one of several, could be 1 to 1, could be 1 to 1.272. Here, what we can see is a clear break of resistance. Now, it's not just resistance here. This is a continuous contract. If we take a look at the actual current March contract, you can see that price is broken above resistance significantly. That's the weekly TAS market profile, which the price number there is 48.97 and a quarter. So that is another level of resistance that has been broken. So when we get back from this break, yes, let's go look at the 3 different time frames for the NDX. This is why the NDX has actually been strong, not weak out here. It broke above its monthly horizontal trading range. Well, when was this? In September. It's just been waiting for everybody to catch up. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at the NDX 100, kind of just working through this methodically, just to be able to put all this together for you. And whereas many thought that the NDX was the weak link out here, Lee Corso was saying not so fast. Now, the reason, when we take a look at these horizontal trading ranges, let me explain to you how they actually work. First, you and I know that the body of the candle is the essence of price. What I mean by that is that's the most important levels for us to watch. It's not that those wicks or those lower or the shadows, referred to either a wick or a shadow, the upper or lower aren't important. Those are really the extreme emotion. What we want to focus in on, at least with regard to take a look at these levels of horizontal support or resistance, we want to look at the body of the candle. So we're trying to identify, we're not trying, we do it. We identify the largest number of either opens or closes, often referred to as co-located. Doesn't matter to us whether it's an open or close. We try to use as much data as we can. In this case here, I've gone back into 1997. We're now 2017, or almost 2017. So we've got 20 years worth of data here. The largest number, and these levels, these horizontal levels, are derived from these price levels. Well, the price levels that are used to give us our distance of where price travels to most often and closes or opens. So this is a monthly chart. The very first level is going to be back at 1576. This is the NASDAQ that we're taking a look at. So this goes back a long way ago. We're trading at 49.57 right now. The second level, there was 26 opens or closes. There were 12 at 23.84. Those two numbers give us the horizontal trading ranges. Now, you're going to see solid lines, one big dash line on my chart. You're going to see solid lines. I'm going to turn off the little dash lines out here. Here is the core of price movements. Now, price will typically move once it clears one level. Just if we come back into the time period of 2009, in August of 2009, gets back inside the next level. Once you get up to the top, which is 2386 in this case here, typically price will go ahead and stall, move sideways, try and break through it, just like you trying to break through any kind of goal, any kind of barrier. Sometimes you can break through those barriers right quick. Oftentimes you can't, whether it's a level of sport, whether it's some type of edge, whatever it is that you might be learning out here. And we can see here that is exactly the behavior inside the NDX 100. at that 2386 level. Breaks above it back here in January 2012, goes up to the very next level of 3195, and had no problem here breaking through that in October of 2013. October 2013, many markets were just simply breaking above their highs. I believe the S&P 500 was. So this thing just went along, really only tested that 3195 during the month of October, and then went up to the next level, being 4,004. Then we tested that on a monthly basis 3 separate times, right? Markets tried to push it down. You had Ebola. You had the Russians, the evil Russians out there of all things. My goodness gracious. You had the evil guy shooting down a plane. Now, that was evil out there for sure. So you had price trying to push down inside the NDX 100. Couldn't do it. Why? A strong horizontal trading range boundary line. Can't bust it down. As early as last time we were down there was in February of this year as the market was pushing lower. Couldn't bust it down. Can't bust it down. Tries to bust it up. That's exactly what the NDX 100 did back in August of this year. Ran right into the horizontal trading range. The same thing, snuck just above it in September at the close. Closed right back on it in October. Last month, the little doji candle closed right on it. And this month, I don't know how this month is going to end, right? Because it's only the 13th out here. But if the NDX 100 is going to stay and trade above 48.13, all the testing has been done. So over a period of time where the NDX is targeting, remember, write down that number, 48.13, okay, and give it a few dollars either way out here. As long as price is trading above that, where do you believe that the NDX 100 is going to? This is not Stevie communicating this to you. This is the chart of the NDX over the last 20 years and its horizontal trading range. Now, we can go ahead and put up that little midpoint out here. Those are the small little dash lines, and that says at 52.18. Oftentimes those midpoints can be a resting spot. They can be a reversal area. So 52.18 becomes a level to be watching inside the NDX 100, but it's actually been strong out here versus the other indices. Now, I say that and take a look at, here's the monthly or the weekly chart. So this week, the number to be watching is going to be 48.70 because we closed above it just slightly last week. Now we've got a conviction move behind it. And yeah, Janet Yellen can come to the party. She might want to try to spoil it. We'll just see. We'll certainly come back and look at this. You know, maybe tomorrow, maybe really Friday would probably be the better day. But 48.70, these are the numbers that you can write down on your pad of paper. You get a close above that. This says that 52.09 becomes a target. That 52.09 on the weekly, the solid green line matching up in essence with the 52.18 level on the monthly basis out here. The next potential resting point on a daily chart is this 49.73 level, but it even gives us and provides us with a target of 51.61. So guess what, folks? We are in the favorable seasonal cycle out here. The NDX 100 giving you another clear message. If we just take a look at these horizontal trading range boundary levels out here, it wants higher price. You may say to me, why? I don't know. It just does. It just works. We're in a favorable seasonal cycle. We are in a favorable, you and I took a look at this. Did we look at it yesterday? No, we don't. I think I did that. I just did that segment on Tom's show. Yeah, yesterday afternoon. And we took a look at this market is not following Ronald Reagan. No matter who it is out there that wants to go ahead and talk about how this market and in the news media and everything, this is the Trump is a Ronald Reagan. And BS before Steve. What it's really following is George Bush Sr. out there. That's what it's following. And if it does follow along those tracks out here, it's moving higher for a long period of time to come. And inside the NDX 100, you're looking at 56.22. Remember, this is longer term. We're getting out of the weeds here with regard to what's going on intraday on a 30-minute chart, 120-minute chart, and so on and so forth. So hopefully that is helpful too. Now, there are problems in River City out here. I'm not ignorant of those problems. When I take a look at the NASDAQ composite, that just says, hey, maybe there's going to be some type of pullback out here. I can see that price is moving higher inside the NASDAQ composite. You can't trade it, but we go ahead and take a look at it as the broader mix of the market out here. But we haven't seen its advanced decline oscillator, that's the bottom panel, make a higher high. So that it's a divergence can be resolved, can continue to be resolved with a little bit market breadth, better market breadth than it has. But it's something to consider. We have that same pattern inside the New York Stock Exchange. You can't sell that pattern. You're just aware of it like a weather forecaster telling you it's going to hail outside. And you look out into the sky to say, hail? It's sunny out here. Well, they're given a forecast. Now, in the case of the Dow doesn't have that problem. So the Dow zooming in, certainly inside the 20,000 level. But if I just switch this symbol out here from the NDX to the Dow, what we can see here, the Dow wants to head to 20,037. Happens to be its weekly not weekly, it's monthly horizontal trading range. So price is going to hit that 20,000 level. May just back off. It may act like the NDX 100 did for a period of time, or it just might be the Toyota. It just might zoom. 22,450 would be its number. Steve Rhodes with TFNN. 20,000 hogwash. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So a couple of requests that have come in. Let's go to those. A couple of comments inside the Tigers Den as well. So let's take, I see a number of requests out here. So we'll get to everything that we can. Inside the New York Stock Exchange, yes, at new all-time highs out here. And doing it with gusto as well. By gusto, we're just simply taking a look at the advanced decline line. That is the bottom panel of my screen. Basically, at new all-time highs now. 38,297. We're at 38,291, just slightly below, which was made a couple of days ago. But look, we know that the New York Stock Exchange, once it took out that island top, right, nothing more bullish than a failed bearish pattern. There was a nice little island top out here between about September the 2nd through the 5th, I believe, or the 9th out here. That level was taken out right here, I believe, right around December the 6th. So for this to accrue, now this is doing it healthy-wise, right? I mean, it has got the advanced decline line, a lot of market breadth here inside of the New York Stock Exchange. That's one positive message. There's others out there. Wait, there's more. Let's go take a look at the wait, there's more. Let's take a look at the McClellan oscillator out here, the advanced decline oscillator reading. And let's go ahead and turn off the advanced decline line. Then we can just kind of space things out here. There is no declining tops real pad. There's nothing of significance. What is of significance is twice in the past period of weeks since November 22nd, we've seen this oscillator reading get above the plus 150 level. Now, at the plus 150 level, it basically also gives us a message of plenty of liquidity out here. There can be times where it's a blow-off top. We haven't seen that at all. In fact, it doesn't exist as we speak today. The move here is real. It is real. It offers the promise of even higher price. There is now nothing stopping, in essence, New York Stock Exchange from continuing to move to higher ground out there. Request to take a look at the New York Stock Exchange 100, meaning the 100, I believe that request was for the 100 U.S. Stocks out here. And as we take a look at this blew past its all-time high, which was back in May of 2015. Did that back here in November 22nd, November 21st, right around there, right in that 87.16-ish area. So the strength inside the New York Stock Exchange is coming from, that's right, Go Team USA. The international market, not so fast out here, well away from its highs. Imagine if the international markets, top 100 stocks represented inside of the New York Stock Exchange, got their gusto. Got there. Now, that's been moving higher, just not anywhere near the strength we've seen here in the U.S. market. But if it did, imagine how that would lift the boat. So the New York Stock Exchange, we know plenty of liquidity out there. There's no question about that. Advanced decline line, that's in bullish formation out here. Don't let anybody tell you any differently, because you and I just looked at the facts. We just looked at the calculations out here. So, but we can't trade these, but it helps you to understand the health of the marketplace. Now, questions that have come in here. Let's see if I can get to first. Let's go make sure we're going in first in FIFO order, as they say. Mike wants to know about, cancel that right there, wants to know about gush. Mike is gushing. Let's go take a look at GUSH. Must have something to do with oil or something. It's gushing, right? So let's go take a look. GUSH might also be a three-time. Yeah, it's a three-time bull. This is the weekly chart, by the way, of the oil services out here, daily S&P oil services. So if we take a look at it, first of all, let's put this back to the daily chart for you. And the question is, will we have another pullback? Well, if we have a pullback out here inside of Gush, what it won't do is get above 122.91. You're trading at 122.55 right now. Brand new daily market profile that formed here today. That's your resistance level. The center of the box, really not the center, but that point of control, the little center dash is closer to the top of the box. That says that the price area here between 109.05 should really be controlled by those sellers, so to speak. So if we have another pullback, Mike, what I'd be looking at is 109.05 would be the number to hold that support. And if it doesn't hold that support, you'll look at this gap area out here from November 30th. That was wide price spread, major wide price spread, accelerated volume. You'd be looking for 97.62 as your secondary area to hold as support. 93.73 would be the next level. So I hope that that assists you with regard to the gusher. By the way, yesterday's candle is not a bearish candle. It was pushing higher. Yes, it's red. It jumped up. It sold off, much like oil did. But yesterday's candle in oil was not a bearish reversal signal out here. So pushing higher with some volume out there is what it was doing. But you now know where the next resistance level is, Mike. So trade with that information. Let's take a look at the next question that came in. Steve, can you look at 3 stocks, if possible, only TGB, TCS, VGZ? Let's go take a look at them. I believe these are mining stocks. TGB. TGB is Taseko Mines out here. What is it doing? Pull back today. Let's go see with those market profiles. So here's just the opposite for you, the requester of this. We can see that today price pulled back right into that center of the box. Not really the center of the box, but those dotted lines out there, that point of control. But this is set up where the buyers are in control of this price area. So price came down to a level of support. We would have said level of support on this is 78 cents to 75 cents, the actual bottom of the box. Because that point of control close to the bottom, price in your seller or the price should be able to make its way up to that $1 even Steven level out here. Today's pullback has got volume of about 1 million shares. This thing broke higher with 1.9 million shares, 2 million shares back on December 5th. So all looks pretty good here in TGB. TCS is the second requested and equity. This is the Container Store. That's nothing. Got to love the Container Store. I've only been in it once, but I like containers. Right? You got to contain things. That's what these market profiles do. They oftentimes contain price. And in the case of TCS, those market profiles are telling us 704 to 834. Now, this point of control is pretty much even Steven. And you know when you get even Steven, in this case here, it doesn't really tell us which way price is going to go. However, we can see this as a high volume high with volume back on December 9th, 1.4 million shares out here. So this is going to go test that level of 834 once again. Of course, it hasn't done it yet, but it should go test that area out there. Any close above that, well, any close above that with volume would be a pretty thing. This has completed an A to B equals CD, but that doesn't mean that it's done moving higher. Those are the price levels to look at inside of TCS, the Container Store. Let's go take a look at VGZ, Vista Gold Corp out here. Let's look for its profiles to shoot up. Of course, this thing broke up with volume. Nice 2 signs of strength out here in this. You got to love this. First sign of strength back here on the trading day of December 5th, 1.9 million shares to the upside. That is wide price spread. Accelerated volume. Then it has a follow-up encore, and that's on the trading session of December the 7th. 1.8 million shares. That was testing a prior swing that had 2 million shares. Okay, not enough. That's why we take a look at volume. And in volume, with regard to the individual stocks, so much better, so much more reliable than taking a look at some of those ETF structures out there, many of the ETF structures out here. Nonetheless, you've got support in this equity right around the 90 to, we'll call it 93 cent level out here. Nice. You got 2 signs of strength. What more do you need to know? Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 148. The S&P is up 19. 2 more requests have come in. Now, I want to hear from you. So send your email, steve@tfnn.com, or give us a call at 877-927-6648. Mike would like to take a look at Chicago Bridge. CBI is the ticker symbol. Oh, and I want to go take a look at Boeing. Our favorite polar bear had mentioned Boeing, so we want to take a look. Let's look at CBI first. So here's what we know about CBI. Big breakout that occurred. Let's turn off these profiles. Prices above all market profiles, daily, weekly. When I say all, really just looking at those 2 time frames out here. So let's go ahead and turn that off. What we do know, Mike, is that this thing had broken out. Wide price spread, accelerated volume. Back on October 28th, did volume of 4.8 million shares. Price came back to the breakout area, did it on November the 8th, 1.5 million shares. Now, the breakout, you never know whether it's going to be the top or the bottom of the gap. In this case here, the top of the gap was really 28.81. The bottom of the gap, in essence, was really 27.71 out here. So you have a nice test coming back to that breakout area. That's all that it means, testing the gap, or coming back into the gap out here. And then you have another sign of strength. So you are right about being long CBI, or taking a look at trying to be long CBI, because you had another sign of strength out here on November 9th. You get another sign of strength on November 22nd out here. So this stock is looking pretty good. Now, what it's doing right now is it's moving into a sign of weakness, a little bit of overhead supply out here. That is, let's turn off, let me get rid of the, where is it? Why that horizontal line? I don't know. It's there for a reason, but we're going to go ahead and get rid of it. We're going to, I got rid of the wrong line. It was the Fibonacci numbers. Okay. But here's what we want to take a look at now, where it's going to perhaps find some resistance out here. So here is a breakdown, right? We looked at breakups, right? Breakouts, really, not breakups, but breakouts. Here is a breakdown, and that's going to be in the 38.41 to 38.74 level. Now, the volume there is 5 million shares, so it really needs that type. It doesn't have to, but you'd like to see this have that type of volume as it gets up this year. Because remember, there were a lot of shares that changed hands on July 22nd. Those people believe that buying this stock between 35.40 and 38.41 was a good deal. They did not think that was such a good deal on September 21st when it got down to 26.46. In fact, they were making pacts with the universe. whoever it is you believe in, whatever it is you might believe in. And if you don't believe, you don't believe. But you still would have made a pact with somebody saying, please, X, you fill in the blank. If price ever gets back here, I just want my money back. So that could be a little bit of overhead supply as it gets up into there. We're really up in there right now because the bottom of that day of July 22nd was 35.40. And so we're really inside there as we speak right now. That's why things have kind of cooled their jets a bit. And that is inside of Chicago Bridge. Now, longer term on a weekly basis out here, let's get rid of those lines again. This looks pretty good because what this has also done is it has broken through a trend line. We'll make that a little red line out here. No matter what we use as a trend line out here, it's really broken through it. So everything looks pretty good. And longer term, with regard to, if these guys are going to build bridges out there, 50.22 is the minimum target. That's just a 0.382 retracement of its move off the highs back in it was a weekly chart back in 2014, March of 2014. 65.12 could be in the cards. So the question might be, okay, well, where do you buy this on a retracement out here? And Mike, the answer to your question is going to be taking a look at those daily breakout levels. First, our task market profiles are pretty well down there. I don't know that we'll see those again. 32.32, though, would be the number to take a look at. But you've got this little breakout area here on November 22nd. Maybe it's 34.10. So, be peaking around those levels out there in Chicago Bridge and Iron Company. Now let's go take a look at Boeing, BA, and as our favorite polar bear pointed out, that right now today's candle is a bearish engulfing candle. No question about it. Let me go see if we can do a wave count out here. Let's go see if we can. Well, price has been moving higher, and it has been doing it with strength. It was doing it with weakness all the way up into December the 9th, but then it got its mojo together. So you've got a fourth wave out there, but prices come down and is testing that oscillator on change line, basically where it's trading at right now around the 156.15 level. So if it holds that area, kudos to it. That'll be bullish, short-term bullish, daily chart. We'll refer to short-term. But if it falls from there and trades below there, what you should see is a test of 153.21, the top of its daily box, or maybe 148.86, the bottom of its daily box. Until you see a break below 148.86, the trend in this thing is still to the upside out here, and that is on Boeing. If we take a look at this on a weekly chart, so still things look basically bullish. Yes, a bearish engulfing candle today, but here's what it's also struggling with. It had nothing to do with Trumpmeister out here. Although, that's the news media. Go right to the huckster out there or the tweeter out there, the tweeter in charge. But really, you can't tell me that Boeing wasn't going to back off once it made a 100% move on a weekly basis, taking it back to February in 2015. That price high of 158.83 is when a market does a 100% move, it usually is pretty gosh darn exhausted. Again, it's a weekly chart that we're taking a look at. That volume, again, 21 million shares so far through Tuesday at 148. You've done 7.5 million shares. Mathematically, I don't know. That's too much for my brain to try to calibrate and figure out whether it's going to be on a straight line basis more than 21 million shares. I would likely say no. It's probably more like around my math figuring would say 17.5 million shares. I don't know. You can test me out there, but it doesn't really seem like it's got the volume to the upside out here. So it's a normal resting place. Quite frankly, you would have been seeing some kind of a pullback inside of Boeing, Trump, or anybody else out there. Just simply 100% move. Now, look, if it takes that level out, and not that it can't, but if it does take out 158.83, does it on a weekly basis with more than 21 million shares, this will set up basically a huge A to B equals CD to the upside. So large, I'm not even going to go ahead and put it in here. Although if I were to put it in here, it would probably look like this I would do it if I could do it, and I can do it, so I shall. That A to B equals CD in Boeing, which probably makes a lot of sense out here. Longer term, you're looking at 204.92, 232.89, somewhere in that area. You got to watch that. You don't have to, but you should watch 158.83 out there. That is my take on Boeing. BA is the ticker symbol. Of course, we want to take a look at the Japanese yen. We want to do that for, did somebody put that in there? I think somebody put that in. Danny in Atlanta wanted to take a look at the Japanese yen. So let's go do that out here. Let's do that. Let's go back to this chart. Let's go see where it's trading into. Let's go to 6J. Where is it? It's right in front of me, the December contract out here. As we take a look at it, there we go. So today, Danny, it's nothing more than a test of that oscillator and change line, and thus far it's held. And yesterday was just a slight close above it. What's perhaps more important maybe is the 30-minute chart out here. What's this thing show? This is showing the potential, Danny, for an A to B equals CD to the upside, taking you to 87.63 pennies. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go out to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you this morning?
I'm doing well, Steve. Thanks for taking the call.
My pleasure. You want to take a look at Intrepid Potash out here. Tell us what you're doing, how I can help you.
I don't presently own it. I saw on the daily that it had, a pretty good sign of strength. What I wanted you to look at is going back to that area in March of 2016 where it came down pretty hard and just see how that was.
Yeah,
how that was tested. That was what I wanted to look at.
Yeah, so you had pretty much similar volume, I think. That downdraft had 14 million shares back on February 29th. That happens to be David White's birthday. He only gets to celebrate it once every 4 years. Is that a bummer or what? But had 14 million shares to the downside. Of course, he's the youngest one on the staff here at, he's got like dog years type of a thing. And he had about
benefits to it for sure.
There are, exactly. So, but then he had about 13.5 million shares to the upside on December 12th. So, I would say it's been taken out with volume out here. Sometimes that sets up, a consolidation level. So the top of the consolidation, in essence, would be about where it's trading now in the 250-ish range or 222, and the bottom maybe around 90 cents or so, 70 cents. But I would say, it's taking care of that downdraft. I don't recall what it was that sent that had that downdraft. Was that something political? Do you recall? Do you recall at all what that might have been?
I don't know. I wasn't watching the stock at the time. I'd have to go back and research it a little bit.
Yeah. So support on this, you're exactly right. Let's assume that, hey, because you have a nice sign of strength, taking out that sign of weakness out here from December the 7th, and you've seen a pullback. The question is, well, where else can this pull back to? It's trading right, in essence, on its point of control, that center box, which is at 220, and that's really pretty much smack dab in the middle of the bottom of its daily box of 169 to 270. So you could start building a position here, portion of it, and look and to add to that position, so that would be your trading plan at the bottom of its box, daily box, which is the top of the weekly at 124, which is really right where that breakout occurred out here. So, if you're looking for a trade that way, that would be one way to look at it. It really was the third sign of strength, right? Because you had a little sign of strength volume-wise, not wide price spread on November 10th. You had again another little sign of strength on December 2nd. You had one on December 6th. So we've seen really one really nice sign of strength out here. And that's how I would take a look at trading Intrepid Potash out here.
Yeah, it seems like it's pulling back with a little less volume, and that's really what I was looking for. What areas would be worth looking at to start a position? And you just answered that, so I appreciate it.
Yeah, the only other thing that I could do is put on a 10-minute chart and just see where that volume came in at, if we can identify that. And that first volume spike appeared at 1010 on December the 7th. And that was at a price point somewhere between 192 and 202, and you're right at 222 right now. So in essence, price is really pulled back into, a breakout-ish type area out here. So and that's what we have to go with, that 160-ish area to this 220 area.
Yeah, I think it hit 202 today was the low, I believe. That's what it was.
Okay.
Yeah. All right. So it's kind of somewhat tested already. All right. I really appreciate it, Steve. Have a great day, and you take care of yourself.
My pleasure.
Right?
My pleasure. Right. That was Brent in Martinez, California. Sorry that, there was a question that came in from Joe. He said, I didn't get to see your segment yesterday with Tom. What did I mean? Look, a lot of people are talking about Trump-nomics of being similar to Reaganomics out here. Look, the reality is when he was elected versus when the inauguration came in, basically there wasn't much of a market change, about 1%. Here's perhaps what the market is doing. It's following Georgie Bush. There was a 5.1% move between election and inauguration, and the market went zoom, zoom, zoom. Stay tuned, folks. David White will be up next. Tom O'Brien and Andy Heck to take it on home. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.